This is our Forex blog for June 22nd, 2011. And every once in a while I'm going to um, try to add some of our systems other than just currency meter to this so that you can get a feel for um, some possible trades. Today, for example, one of our systems is if a currency is up 4 days or more, you want to sell it at the upper band. So there's a lot of nice, very high probability, low risk sells in the euro dollar, and also the pound dollar is up 3 days in a row. So anytime a currency is up or down so many days in a row, it tends to reverse at the upper bands. If you look at the pound dollar today, to the pip at our upper containment band, and then fell 150 pips to the low here. Very high probability sell given the fact that it was up 3 days in a row. Exact same thing happened in the euro dollar. We had a bunch of counter trend signals late last night. It came up to one of my Fibonacci areas, which all of our mentor students have. Very high probability resistance area. It was also the reason why it was the high yesterday too, by the way. And so you had some small trades. This trade here took off. This doesn't quite meet the upper area, and because it was up 4 days in a row, you don't need to wait for the upper band, which is all the way up here at 44.40 earlier today, and today that upper band is off the chart. It might be 44.60. Quite a few of us in our live trading room, I started getting short around 44.10 and scaled in. My average price was 22 and made about 18 pips on this pullback here, and now it's going back up. So if it shoots above the previous day's high and you draw your fibs off this wave, the next wave up 44, maybe 65 to 4,500 should be a high probability place to sell. But the point is, anytime a currency is up or down 3+ days, look for a reversal. If you see any kind of patterns like this where it goes sideways here and breaks down, very high probability. Another hour pattern where there was no selling or there was no buying above 44.40. When it broke down underneath the 30, very high probability place to sell, and it fell significantly. Actually, it looks like it did hit my 43.90 area. Phenomenal. But our normal method is just try to trade the strongest pairs. Today the pound was extremely weak all day, and the dollar was only strong for about an hour. The yen was strong for quite a bit longer than that. So basically you'd be looking the highest probability trade, obviously selling the pound yen. You don't want to sell a weak currency against another one that's weak. Even though the pound dollar fell significantly, the pound and the dollar are both weak. You never want to sell two weak ones. So let's bring up the pound yen chart, especially at 3 o'clock when the pound was super weak. Here's 3 o'clock. It's above the hourly, but it clearly had trouble breaking out, had a false breakout over the previous day's high. Anytime you can go back an hour, 2 hours, 3 hours, even 5 hours and see what happened. There was some strength, but it came up to this resistance area up here, weekly pivots right there, previous day's high, and it failed. And once the strength disappeared right around here, it was likely to pull back, maybe find support at the hourly, and if so, and it broke above this little sideways range, that's a decent place to buy. As you can see, it pulled back to the hourly, starts to go up, you buy. That trade worked. But it hit the hourly once, twice, had a false breakout over the yesterday's high, and when it broke down right here, very high probability trade, and because it had a narrow range pattern over the previous 4 hour distance, that when it broke down, it's likely to trend. And you can see I think the weekly trend is down. This is a very high probability trade. You might have taken it as a scalp and then when it went short again when it broke the little pullback area right here. And you always want to draw your fibs. Most of the time the 1.618 is going to be the maximum profit target. And you can see in this case, it kind of came down here and stalled. I would have been out somewhere in here at the latest. But that was a very high probability trade. You're short either here at 95 and made about 45 pips, or when it broke out of this little channel. More aggressive traders, and I put myself in this category in this particular instance. Anytime it pulls back, the bars are red, you see extreme weakness, and it breaks the hourly right here. It doesn't get any better than that. Because it found support here. Traders are long. And when it goes below there, everybody who's long is losing money. So you know there's going to be some push to exit those trades, and that can cause the big drop like you saw today. Now another one that was extremely strong today was the euro. So obviously it made sense to buy the strong euro versus the weak pound. And you can see just an astronomical trend up. And look at the pattern here. It's underneath the hourly, but it's finding support at the previous week's high. So this currency is already above last week's high. That's one sign right off the bat that this currency's quite strong. And when it broke out above the hourly, same exact opposite side trade as we just saw in the pound dollar, or was it the pound yen? When it hits an hourly once or twice and then breaks through it, it's very likely the beginning of a new trend. And notice how our trailing stop got you in here. It looked like you might have gotten stopped out here. You had to get back in, and you made a little bit more in that pullback, that last wave up. It pulls back down again here. You got in as it starts to go back up, 89.11, out right here. So that's another 16 pips. And when you're above the upper containment band, usually price does not continue. I would always draw my fibs on this last wave, and this is most likely to be the maximum high of the day, which it is, as you can see. Aggressive counter trend traders might have looked to go short up there. Anytime you're fighting one of the stronger trends, if you get a shallow pullback, be happy with it, take your profits, and don't complain. That only for the most nimble traders would I recommend shorting one of the strongest pairs. I saw it today and I was scared to sell it. I believed it would come down, but and it did for about 10 or 12 pips. The Swiss also consistently strong across the board today. Weak pound, strong Swiss. So selling the pound Swiss, pretty much a no-brainer. Just down, 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 down. And again, look at this hovering here at the hourly. Anytime it hovers here and it breaks out, that's a pretty decent buy. It didn't really pan out. You got stopped out with a break even or a small loss. You went long again here. Went right up to this resistance area and failed. There was almost no strength whatsoever. You might have made money on that second trade. And then when this finally broke the hourly here, because it had no strength on the way up, if it can't go up, it's likely to go down. And our currency meter clearly showed the pound was weak and the Swiss is strong. And that's exactly what happens. Small profit here, the second one small profit, and this just kept working its way down. When you're in one of the strongest trending currencies, you might just want to, every time it makes a move down and kind of consolidates back up, keep yanking your stop above that little sideways range of the pullback. So it made a lower low, came up, made a lower low, came up, you move your stop down. This is one way of staying into these trends and catching some of these outrageous moves. Came down again and came up. As it starts going down, you move your stop down. Came down and came up. If you're in one of these currencies that just doesn't want to ever stop going down, came down and went up. And at some point, when it's underneath the lower containment band, I'll be looking this right here at a double bottom. If it couldn't go underneath there, that would be a good place to get out. It's likely to come and pop. But it didn't. It came back down and broke the previous swing low and kept going down. When it's this far underneath the lower containment band, and especially the 3.0 band, don't be greedy. Any sign of it stalling, you want to get out. You want to put the 3.0 band on your charts. Usually at or underneath the 3.0 band is the end of the move, period. So don't be greedy underneath the green 3.0 band. So when it's coming down here and it starts to go back up, that's the end of the move. I would stop shorting, and this is a decent area to get out of that trade. But what a phenomenal, just one-way trend all day. And if you see and you're in one of these super weak currencies, instead of using a 5-minute bars trailing stop, you might want to go to a 15-minute bar. It's very likely to keep you into the move the entire way. It's going to do all the statistics on here, and you can see, it just got you out right here, right near the low, up at 98. It kept you in it the whole way down. It's a relatively tight stop for a 15-minute bar, and almost got stopped out here, but it didn't. And you can also use this as a way of scalping in that direction too. If you see a super weak currency and it comes up within a few pips of the stop, take a scalp trade, and if it takes off, you hang with it, and if it doesn't, try to take 5-10 pips, and those add up. Another one that was weak today was the CAD, so that selling the CAD Swiss made sense. Mainly we use 5-minute charts or smaller, but you can see on this little pullback right here, if you went short, you might have got stopped out. You went short again, and let's go back to a 5-minute chart. There's really only 2 entries. Once we find a weak currency, especially ones that are in a very narrow range like this, when it breaks down underneath the lows, decent trade, it only fell about 10 pips. You have a pullback here. The 10 and the 20-day moving average are right there. So those were major support areas. Once broken, now become resistance areas. When it can go above that area and starts to go down, you go short again, and you can see this thing fell about 50 pips. Not quite as weak as the other Swiss pair I just showed you.